Hello, business owner. You are planting your flag in Texas, the economic engine of the South. With no personal state income tax and a massive market, it is arguably the best place in the country to start a business. But while Texas is famous for its freedom, the Texas Secretary of State operates on an unforgiving compliance calendar that strips thousands of businesses of their liability protection every single year because of one specific form. In this video, I'm going to walk you through the exact steps to form your Texas LLC correctly, navigating the outdated SOS Direct system without exposing your personal information. And you need to stick around for the final section because I'm going to explain the May 15th trap, a deadline that applies to you even if your business makes absolutely $0. If you miss it, the state forfeits your right to do business, leaving you personally liable for every debt your company holds. I have also placed a link in the description to the formation service I recommend most for Texas. I use them specifically because they understand the unique public information report requirements, ensuring your management details are handled correctly to maximize your privacy. The name availability check. Everything in Texas is bigger, including the list of registered businesses. Your name must be distinguishable in the records of the Secretary of State. You can't just change LLC to Co. and pass. Before you buy a domain or print truck decals, you must create an account on SOS Direct, which costs $1 per search to verify availability. If you skip this, your $300 filing fee will be rejected and you will face weeks of delays. The registered agent. Texas law requires every LLC to maintain a registered agent with a physical street address in the state. This agent receives lawsuits and government notices. Here is the privacy trap. This address is public record. If you're running a consulting business or e-commerce store from your living room and you list your home address, you are putting your family's location on the internet. Using the professional service I linked below protects your privacy by using their commercial office address instead of yours. The Certificate of Formation. In most states, it's called Articles of Organization. In Texas, it is the Certificate of Formation. This document costs $300 to file. The critical decision here is management. You must choose between being member-managed, run by owners, or manager-managed, run by appointed managers. This choice dictates whose names appear on the public record. If privacy is your goal, a manager-managed structure, sometimes utilizing a separate holding entity, can offer layers of anonymity that a standard structure does not. The Texas SOS Direct website looks like it was built in 1998. It's confusing, clunky, and charges you credit card processing fees for every move. I want to show you a modern way to handle this. I recorded a quick walkthrough using the service I mentioned in the description. This tool auto-populates the Texas-specific Form 205 and ensures you don't get stuck in the state's outdated portal. Watch this.
Select the LLC option for business type and state. In my case, it's Texas. Choose the options that best suit your business. Add your contact information. You can add the data of a partner or co-owner. Add your business name. Add your business information and click Continue. Then, add your business location. Choose the options that best suit your business. Finally, add your payment information and click Continue. Congratulations, you now have an LLC.
That is how you get it filed without the technical headache. The EIN. Once Texas approves your certificate of formation, you are official in the state but invisible to the IRS. You need an EIN to open a business bank account. I say this in every video because it's true. Do not run your Texas LLC through a personal account. Texas courts are strict about piercing the corporate veil. If you commingle funds, you destroy the protection you just paid $300 to create. The operating agreement. The Texas Business Organizations Code, TBOC, governs your LLC if you don't have your own rules. This is risky. The state's default rules might not protect your specific interests in a dispute. While you do not file this document with the state, you must have a signed operating agreement internally. It is the only thing that proves you are the true owner and authority of the company, especially in banking situations. The May 15th trap. This is the open loop that kills businesses. Every year, by May 15th, you must file a franchise tax report and a public information report, PIR. Here's the catch. Even if your business makes $0 or falls below the tax threshold, which is over $1 million, you still have to file a no tax due report. If you forget to file this simple paper because you don't owe taxes, Texas forfeits your corporate privileges. This means your LLC effectively stops existing for liability purposes, and creditors can sue you personally. You need a system that reminds you of this deadline every year. Texas is a pay-to-play state. The fees are higher and the deadlines are strict, but the protection is powerful if you maintain it. Don't let a missing report destroy your shield. Go to the description, click the link I've provided, and start your Texas LLC the right way. It takes minutes to ensure you never miss that May 15th deadline. My verdict is simple. Don't mess with Texas compliance. The state doesn't care if you didn't know the rule, they only care if you filed the form. If you found value in this video, please subscribe, like, and drop a comment below. Until the next video,